Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody. Today guys, we again will take a look at the euro currency. Well, from the technical point of view, this currently is just fewer than we could do. It's reasonable miserable plunge. Yesterday's free falling was really impressive, and currently, as you can see, market has accelerated almost right to the 1618 extension target of this ABCD pattern. And since this section was really fast and furious yesterday, it's nothing that we could find right now on the intraday charts, because it's just really big candle on the chart right from the top to the bottom, and it's nothing. It's really valid to trade on the intraday charts. Since action was really significant, it makes sense to take a look at the daily time frame chart and even on the weekly. So if you'll take a look at the weekly chart, you'll see that on the weekly chart, market is also oversold at fib target, at the extension, the fib extension of this ABC top D pattern. In the nearest future, maybe even today on the non-farm payrolls release, we probably will see some momentum action to the downside. Market will hit this 1618 extension target. Just a couple of moments that I would like to talk about. First of all, currently it's really unsafe to take any short position, because market is oversold as on the daily as on the weekly chart. What does it mean? It means that we probably will see either retracement to the upside and some pattern on the daily time frame chart that could trigger this retracement, or at least we will see the flat lazy action when the market will try to exit from the oversold condition, something of that sort, but on the weekly chart. So, since market, recall that here we also thought that market could show retracement to the upside. Here was the, by the way, significant level, but market, as you can see, hasn't shown any bounce to the upside here as well. It just shows some flat action and then continue move down. So this is also could happen, and currently it's very difficult to suggest how really it will turn. But if any pattern will be formed on the daily chart here, right around 1618 extension of this ABCD pattern, in this case we could count on retracement, because another reason for that is that on the weekly chart, I don't have this weekly chart with the fib levels that we have made on the previous weekly research, but on the weekly chart, around 132.40 area was the confluence support. It's 3.8 support from this move, from that low to this high, and 6.18 support from that low to this high. Okay, market has passed through it as the hot knife through the bottom without no respect. And in most cases, when we see this fast action through this significant area, that very often leads to retesting of these areas from the other side. That really could happen. When the emotions will come down on the markets, some retracement really could happen here. That's possible. That is what we were looking for in the medium-term perspective. From the daily chart in turn, this could start by some Jordan-Napoli pattern, because you can see this thrust down is just excellent. Some maybe double repo pattern will be formed, maybe something of that sort. The problem with the current standing of the market is just, in fact, it has no other support right at the back beyond of this ABCD pattern target, and of course oversold. We have no weekly fib levels right at the back. That's the problem. And finally, the second conclusion, or just thought that we could make, is concerning yearly pivot support 1. So we know that 130.60 area was the yearly pivot support 1. At the same time, we also know, guys, that if market passes and breaks through the weekly some pivot support ones, in our case yearly pivot support one, it means that it's not just a retracement within the long-term bull trend when the pivot support one usually holds this retracement, but if market breaks through the pivot support one, it means that market stands in a corresponding, in terms of the time frame, a corresponding trend, and that makes me think that it's really, I do not know how market will close by end of the current year, but if it suggests that market will remain below the yearly pivot support and the chances on that is really significant, it means that the 2015 trend on the euro currency also could be really bearish. So that's been said, in the short-term perspective, I think that we should do nothing and just wait how market will respond on this really drastic and miserable plunge that we have seen yesterday. I count on some pattern that could trigger some retracement. Second moment, this probably action will continue, but right now as market tactically stands at the result, it's not time to take the short position right now. Also, guys, another thought concerning the some moments that we have posted in today's update on the forum from the context of the yesterday's Mario Draghi speech. Currently, it means that European Central Bank will try to apply the quantitative easing program approximately for the 1 trillion euros, and it means that those of you who manage or trade intermarket portfolios, I mean that who trade not only on the Forex but on the European bonds, on the stocks, now guys, maybe it makes sense to think about the massive purchasing of the European stocks, because if this really will happen, we will get the rally on the stocks that will look like the corresponding rally on the United States stocks, because the liquidity that will be inflows on the market, it's really it's no source to accommodate, no source to put in except maybe stocks, because bond stands already on the lowest levels, so the yield is not really impressive. Gold, as liking of the inflation, will be flat or even will be under pressure, and this is not interest-bearing commodity and not interest-bearing asset. So the one way where to put the money from the European Central Bank is stock market. And yesterday you already could check the reactions of the European stock market, has risen approximately for the 2-3%. So that's the first sign, the first reaction of the coming liquidity flow, and this really could continue. So the euro currency is really right now interesting, but we need some patterns to understand what really was going on and to trade, in fact. So after this really miserable plunges right now, is nothing to do on the euro currency. We need to give market some time to breathe out and to calm down all the fade emotions, and just to see what really will happen.